Senior economics reporter Steve Leisman joins us right now with the latest results from the CNBC Fed survey. Steve, what do they tell us?
Yeah, they're saying that, like the market itself, Becky, they're in agreement over the near-term outlook for Fed policy. What happens is they become divided, and they also split with the Fed over whether the Fed holds or cuts by year end. Look at the Fed expectations chart from the survey. 100% seeing that quarter-point hike this week. 82% see another hike coming in March. The funds rate then reaches the peak of 5%. That's the average forecast by April, where it holds on average for 9 months. But then 44% seeing cuts by December, with a handful expecting them as early as September, and another small handful expect those rates hikes to continue through December. So here's the outlook from the funds rate, for the funds rate from the survey. 4.38 the current rate, goes up to 5% by April, comes down to 4.69, which, by the way, is a bit higher than the funds market pricing is. And then again, it comes down even more next year, December 24, 3.76. Highlighting the gap between the market and the Fed, Steve Blitz of TS Lombard doesn't hold back. He says the idea the Fed is going to hold at high rates is silly. Once employment growth slows to 100,000 per month or declines, the Fed will end up with the funds rate less than inflation. Asked if the Fed is really watching the data, 58% said, yeah, the Fed is data dependent, but a pretty large 42% think the Fed is headed to 5% regardless of what the data say. What about the reasons? Why are the Fed and the market in different places? 39% say it's because the market is more optimistic on inflation. 24% believe the market is underestimating the Fed's resolve. 9% say it's because the market's more pessimistic on growth, and another 9% say it's because of difference on what's being forecast. Another chunk of folks say it's because people believe in the Fed put. The Fed is not going to hit its 2% target for some time, according to this survey. Not in 2023. 47% do see the target coming in being hit in 2024. 36% 2025 and later. 15% say, hey, it's not going to happen. But a vast majority don't think the Fed changes that 2% target. All right, so the 44% banking on a cut. They're up against a Fed that made a point in the minutes of the last meeting to note that no Fed member sees cuts this year. We'll have to wait for the meeting and the press conference, guys, to see if the Fed and Chair Jay Powell dig in their heels on that forecast, or, which is what I don't expect, take a step towards the market's view. Becky?